Hey, what's going on? Hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm going to give you a market update. And this update isn't about individual companies. It's about prices and the big picture of all of these commodities that we're looking at. I'm also going to step into a little bit in housing starts because it's so important to understand this. Once you understand this, I mean, it's game on for making money. So jumping in here, market update. So this is what we're going over here. We're going over real estate, new home starts, and recessions. I'm going to go over the dollar and euro dollar and a lot of different commodity charts. This should give you guys the confidence to either hold on to what you have or to cost average into whatever you want to cost average into. So first I'm going to start with housing starts. And what housing starts is this is new privately owned housing starts. It's new homes being built in America. That is what it is. 1.5 million is roughly the demand on a yearly basis. And what I did here is I put in lines to indicate that the yellow is where the housing starts was declining in all of the yellows except for this circle here. And what I want you to know is, and hopefully you guys can see this, these dark lines is a recession. So the dark lines are recessions. That's the dark, like shaded lines here. And what you see is after every housing decline in housing starts here, that's the yellow, every yellow one is followed by a recession. Every single one of these is followed by a recession. Every one, except for this one here. Now, I don't know why this one wasn't. I don't have the data here. But it went down and there was no recession here. But every single one, other than this one in the circle red here, all of these other ones all had recessions. What is that telling us? It's telling us that when housing starts to decline, we get deflation or less inflation. Less inflation or deflation, and we have a recession. Every single one but one. So what we want to see in an inflationary environment is that opposite to happen. So in order to have deflation, what a lot of these people on YouTube talk about, deflation, you have to have the housing starts go down because that's what it's telling us outside of this one fluke in history. 1, 2, 3, 4, 5, 6, 7. 7 times since late 1950s, we've had a recession after the housing starts declined. That's it. 7 out of 8. We are entering a housing market expansion phase. So I don't know how the heck a lot of these guys within the deflation camp can say we're going to have deflation because I have to see the housing starts decline. And I'm at a 7 out of 8. That's the probability through history. 7 out of 8 times the housing market decline ended in a recession. And you have to be in a recession for deflation because deflation is going to be recessionary. Monetary deflation. I'm not talking about prices. Prices are not deflation. Prices are a symptom of deflation or inflation. So here's the dollar index. I want to go over the dollar here. Nice big chart pattern going down. Perhaps this breaks to the upside, perhaps this breaks to the downside. This is one to watch. It's in a chart pattern. And remember, big chart pattern breaks result in big moves. So it's one to watch. I think it's going to drop to the downside based off of all these other chart patterns I'm going to show you in the future. So here we go. This one is the euro dollar. I didn't mark this chart, but I know what it is. The euro dollar. Now, if you look at this, in 98, 99, it flashed a buy signal for commodities. The dollar declined, or the euro declined, and then eventually the euro outpaced the dollar. This is the euro outpacing the dollar here. So from 2000 all the way to 2008, this was the cycle of going up where euro outperformed the dollar. I'm just going to show you something. I'm going to go back here from 2000 to 2008. Hey, look, we're in an expansion phase of the dollar. The dollar declined against other currencies. Same thing happened here. Late 60s, 70s. Let's look. Oh, it's not on this chart. Sorry. But we're coming up where the euro is going to outperform the dollar. We broke out of this chart pattern. It's a clear break. came up, pulled back a little, just like it always does, and now we're pulling up higher. So we're looking at, the last boom was this one, and look what's happening. Again, confluence, the merging of information's coming together, where we've got the euro outperforming the dollar. I think that the dollar's declining, and that we're going to enter an expansion phase, which is inflationary, which makes sense to the housing starts here. It's making sense. And we have the commodity buy signals, which we've had, have this happen before, and we're going to enter a commodity supercycle. Dollar's going to go down. Now let's look at copper. Copper broke to the upside. More confluence of information. What about tin? Tin's breaking out to the upside right now. More confluence. Nickel already broke to the upside, and it's starting to move higher. Here we go. More confluence. Zinc, it's in its pattern, heading higher. Silver. Look at that. Now silver broke a downtrend. We pulling up and it's hugging the top rail right here. That's why I'm a big bull on this. This thing breaks. It's just a matter of time. It's going to go higher because we have all the other confluence. We have the euro breaking out against the dollar. We've got all these other commodities breaking to the upside. This is going to go to the upside. It's got to. It's got to be with the rest of the group. Gold. Gold's in its pullback right now, and I've kind of drew all over this thing. Here's kind of a larger pattern here. It kind of broke down, came right back up, and we're just heading down, and eventually this has got to go higher to meet and mirror all of the other assets. Housing starts are increasing. Gold has never gone down when housing starts increased in a commodity supercycle. It hasn't happened. So I'm a buyer on this pullback. Here's crude oil. We're in a big, massive chart pattern in crude oil. Look at this thing. We're in it. It's going to take some time to get it and break above this, but it will eventually because all the other market conditions are showing us that, hey, look, dollar's going down, commodity supercycle's coming. And I would be a very big buyer of crude oil because the values are ridiculously cheap. Here's crude oil in a very big, this is a zoomed in on this portion in here. So we're zoomed in. You can see this chart pattern break, went to another chart pattern, broke to the upside, and now we're moving higher. If we break up above this, I think we could see this thing really move. Maybe it breaks down and hits the bottom, retests the bottom here. But we'll see. It's hugging the upper channel. Maybe this thing breaks and it goes higher. Here's natural gas. We're just chilling in this channel here, going sideways, and eventually when it breaks this big pattern, man, it's going to be game on is what I'm going to say. And it's going to be cheetah speeds higher when this thing breaks to the upside for natural gas. It's going to take some time though. Here's lumber. Look at lumber. My God. Right? Look at this chart pattern. I drew this line. It's a big wedge pattern. Came all the way up. You think people, when lumber was $100 and something down here, you think they were going to say, oh, it's going to go to 900. They'd say, that's never going to happen. Lumber's not going to go to $900. It is. Lumber is going to go to $900 when you're in an expansion phase of real estate and you've got a housing shortage. And look, it's short. There it is. There's more confluence to the housing starts and to the commodities boom. Here's cotton in its massive chart pattern. Look at that thing. It's probably going to go all the way up to almost $200. Here's platinum. Look at platinum breaking out. Hey, what's going on, platinum? You want to go for a run? Yeah, look at platinum wants to go for a run. It's going to go way higher. Uranium. Look at uranium. Look at this guy. Back, pops out. Little 2020 popping higher. Little pullback. Remember our momentum. Big up day, small pullback. Where do you think this is going to go? You might as well just draw it off the page. Look at lead. Just putting in the flag pattern of its life. Look at that thing. Looks beautiful. It's just going to break up and go higher like every single person should. So I just wanted to go over and show you guys all these patterns. They're all massive. Lots of them breaking to the upside. This is just a matter of time for some of these that are consolidating like gold and silver before they break higher. The market conditions are all in place. The confluence of information, all of this merging of information all coming together, it's showing and painting a picture that the commodity cycle is here. We're at the beginning of the beginning. So what I'm doing and what I did already, is I took my positions and used my technical analysis. I leveraged the hell out of that. I hit that leverage button on my technical analysis, said, hey, these things are bottoming. I'm in. Like, I started accumulating like mad. I did my fundamental analysis. I went down, did my fundamental analysis. I found the companies that I thought were the best possible prospects, and I got in my favorites. I'm locked. I'm ready to go. So, use these as confidence. Use these chart patterns and seeing them break to the upside. Use it as a way to mentally get through any of this volatility that we have. I can't give, this is just 100% financial education, everyone. So this is my opinion and my opinion only. I'm not telling anyone what to do. I'm just giving you the market conditions and what I'm seeing in the market. Hopefully it gives you guys confidence to invest whichever way that you decide to use and invest your money. If you guys enjoy this content, click the thumb up button. Man, that's hard to do in front of a camera. and subscribe, leave comments and what you guys want to see. And hopefully I'll create some videos based off your guys' comments. This is Finding Value. Thanks for watching.